All right, so let's talk about milestones and funding. All right. So the first step in the process is that we need to steer the ship away from where our focus right now is on primarily doing appraisal services for our clients. So we need to be able to steer the ship so that we're going in the direction of servicing distressed homeowners and trying to help them out of their situation. And the first step though is going to be the model. Um, Taking all of the appraisal processes that we have, putting it into a model. This step right here, I've done a lot of the programming, all the steps. It all needs to be put together into an end-to-end solution. So we're looking to take 50,000 towards the model, $50,000 towards working capital, 50,000 towards marketing. This money right here is going into digging up those acres of diamonds. So that's primarily going for. This is 350,000. That's going towards the working capital for the fund. So let's talk about the actual milestones. All right. So the valuation model. Uh, the valuation model is going to be probably our biggest advantage. I want to start with that first. I'll talk a little bit about why it is a little bit later. 350,000. Our typical deal is going to be a property that we can pick up for 300, 350. Put 100,000 into it, and it'd be worth between 550 and 600,000. So that's going to be our typical type deal. It's going to be in older, established neighborhoods. A little bit. If you're in Orlando, we're talking about College Park, Maitland, Winter Park, those type of areas. Just a step up. Conway, just a little bit of step up from your middle to lower middle class. That's going to be our target market. Milestone for this convertible note phase for phase one is going to be start to fundraise for the next phase, which I'll go over in a minute, and then launch the main fund, the real estate fund. Also establish a title branch. So let's talk about the AI appraisal management. This our target client is generally going to be lenders. Okay, they're going to be homeowners and other types of and attorneys, tax professionals. Those are other, but our main clients are going to be lenders. Okay, and what I found out from our audience is that they want speed and transparency. This is what our clients want, right? In order to expand our initial our base of clients, the valuation model is very important. What the valuation model will do is we'll design an interface for the loan officer. It'll integrate with our valuation model. It'll be an automated valuation model, so they can actually, as they're putting in the order, they can actually get a range of value based on the criteria that an appraiser is going to use to evaluate the value of the property. Now that's big, because most clients right now they put an appraisal order out there. They have no idea what is going to come back. They throw it out into the ether. Comes back a week later. They have no idea what's going on. This appraisal model is going to help with transparency. they'll see initially what we're looking at. It'll give them an interface where they can go and actually provide comps if they don't like what the value is. The model can automatically evaluate those comps and integrate it. If our model is completely unbiased, the best comp works. So if it's something that we missed, we'll add it into it, and we'll score it, and we'll add it into our consideration. It's completely unbiased. It's no appraiser saying I'm not going to go and my value is I've been doing this for 40 years. Just trust my value. No, it's completely transparent. It's going to give them an instant value range. I want to tell you that's big. No appraisal management company is going to touch that. But this is all going to be based on data. Okay. You do have some companies that do where you can get an automated valuation, but it's not based on the principles that appraisers use. This is all going to be based on the systems and methods that appraisers use to come up with the value, which is important. They can book their appointment instantly. They can pay for the appointment instantly. There's transparency, so they know what's going on, and they can get the file. Our goal is where they can get the file delivered to them quickly after the inspection. If you're a mortgage professional, you get this. If not, trust me, it's a big thing. So with our because this initial phase, with this limited amount of capital until we can gain more capital from the fund, a big thing is going to be just to wholesale anything we get. That's just going to be the big push. We have contacts in the real estate investment community. We do their appraisals all the time. We have a buyer's list. We're going to offer that out to most of the deals that we come across. We're going to be trying to wholesale it to preserve the capital until we raise more money. Project contract. So project contract, what we're doing, I'm going to go a little bit into this, but what most the advantage here is that most realtors, they're offering appraisal, they're offering a little bit of legal, they're offering some inspection, they're offering design, they're offering all these services, but they're a jack of all trade and a master of none. You have varying levels of expertise when you deal with a realtor. They have a limited capacity of what they can do. So you can get a realtor. They might have just gotten out of school, and they've only had 3 hours of appraisal class, and maybe the broker kind of showed them how to do a CMA, but they don't know how to do evaluation. Where an appraiser, as an appraiser, you get your appraisal license now, and they shortened it up. I don't know if Florida's adopted it, but I mean, last that I remember, you had to go through 300 hours of classroom time, not 300 hours of classroom time, plus you had to have like 2,400 hours of actual experience over a 2-year time period. Then you got to pass the state exam, and then you got to continue to take continuing education and so forth. And most of the time you have to have a degree, or some training in economics and some other things. So the level of expertise that an appraiser can give is higher than what the typical agent is. So we're competing against agents. So our project contract is not where it's where what we're doing is we're piecing together the components of the transaction. So the components of a transaction is you need to do an appraisal. If I'm a realtor, I'm doing a CMA. That's a type of an appraisal. If I'm writing a contract, I'm doing legal work. And they're not lawyers, right? They're a lot of times they're giving the homeowner advice on how to make their property appealing. They're not designers. So what we want to do is we want to give the same service, same type of service, to homeowners that a traditional real estate agent does, except we're going to have professional people do it. Same price, so we're going to have professional people do it. And they can customize what they're doing so they can cut out things. So maybe they don't want to do the marketing. Maybe they don't want us to do the marketing. Maybe they're going to do their own open houses and they're going to put a sign out and all that stuff like that. But they need somebody to do the legal. They need somebody to get the appraisal done. They might need to get the title done. So we can customize the contract to whatever they want for a fraction of the rate. So instead of doing a listing agreement, we do a project contract. And so this helps out because we can they can get it done at a fraction of the cost, and they get professional people handling the transaction. They get a better quality, and they could possibly get it for less. All right, so Horizon Home, we're going to put that out there. Horizon Homes, right now, we do not have the infrastructure, so we're going to take a white label service, put our name on it, and then we're going to package that up, and we're going to still offer Horizon Homes, but with other people's packaging for right now, right? Until we're able to develop our own proprietary software. So that comes in under Equity Fund 1. So again, most of the money is going towards creating IntelliHomes, right? Horizon IntelliHome. 1.1 million of the 5.5 is going towards working capital and intellectual property. So we want to have at least one ground up home going, 10 fix and flips. It's very possible that there could be a mix and match depending on the opportunity. So if you get a great deal on some land, we might do mostly ground up houses, right? Or we might not be able to get a great deal. We're looking for the deal. Whatever the best return is, that's what we're going for. But this is what we're right now, without information on the ground. That's the goal. The investment model. So the investment model is important because we're going to take the valuation model that we created first, integrate it with an investment model to be able to help with the investment decisions. This is key. Okay. An appraiser as a fund manager has its advantages. We see value that other people usually can't. A lot of times people don't actually know how to measure a house properly. To come up with the gross living area, a lot of times people just rely upon the county records to come up with the gross living area. And the gross living area is very important. The square footage of a house is very important, and most people don't even know how to accurately calculate that. This is something that investors kind of hold close to the chest, that we know how to do ANSI standard measurements, where I've just seen people just they take the county record, they don't verify it. So I mean, a lot of things where we know how to find hidden value. There may be areas of the house that we can enclose, that we can add to the living area of a property. We might be able to analyze a piece of land and find out what the difference is between excess land and surplus land, and be able to maybe subdivide the property. There's different methods that we have where we can train the model to be able to look for these hidden values that other people really don't know or understand right? How to find it, and that's going to be that's kind of the competitive advantage I had. Is there was a house that I was doing over in Longwood. The gross living area was 2,000 square feet, and then they had a bunch of area that they put for that they listed as enclosed porch, right? And so if you're an investor, you're doing all your numbers off a 2,000 square foot house, but all that enclosed porch area could be easily converted into living area of the house. And so I picked up another 1,000 square feet that I knew that I could easily change. Everybody else is bidding on a 2,000 square foot house. I'm going to make it a 3,000 square foot house very easily. And I was able to outbid them because I had a more valuable house than what they were calculating. So things like that is what we want to go, and we want to take our valuation. So you're going to have a model that's connected to the live to the MLS that can value deals all day long, even in your sleep, and be able to just pull these acres of diamonds up. So we're looking to take that, automate it, so that we can make better investment decisions. The operation model, we're going to look to automate a lot of the business processes that we do. I believe that just by the last year, I've really taken a deep dive into into the artificial intelligence realm, and I really feel like a lot of things that we do is going to be able to be automated. And AI is going to be doing a lot of the customer service, going to be doing a lot of the sales and customer support type services. So we've got to be prepared, and we've got to be able to generate these things. I think that AI agents will be a thing. So we're going to move in that direction. Design model. We'll need that with the construction of the properties to help expedite the design. We'll work on doing our own proprietary Domus deed. So we did the white label service where we were using someone else's NFT title, but we'll develop our own Domus ID. We'll get our own proprietary Domus ID so that we control it. Then I'm looking to tokenize the fund. This is an aspect of the fund that I want. I want to be able to put it out as a token. Once the lockup period is done, I want to be able to have it where an investor could actually, if they didn't want to stay inside the fund, obviously we can't process a lot of redemptions because we're doing one deal after the next, and it's in a liquid format right now. But I want to be able to make it where they can sell it in a tokenized fund. They can sell it on the secondary market. So I want to have that feature as a part of the fund for exits instead of redemptions. Basically, we have the same products, and we have our same clients in this phase. We're just making investments into furthering this. We're getting closer to the final piece of the puzzle of putting all this stuff together, so that we're getting it from 30 days down to 30 seconds basically. Now also inside of here, I don't want to go into the entire explanation of it because I'm trying to keep this as short as possible, but these transactions will be done a lot quicker than 30 days. We'll probably be able to get this down to, for the most part, within 2 weeks. But I'd have to, and then eventually at another piece we'll get down to 2 days, 2 to 3 days. So equity fund 2, we'll do a capital call. The next phase 3, we'll do a capital call, 26 million. We will start a debt fund. I'll explain why. We will we'll work on putting together a mortgage model, and this is what I think a lot of people have problems with, is that they make these models, and what they don't understand is on chain, in order to so there is no jurisdiction that recognizes a blockchain asset at all. They don't recognize it. So all of these assets that you're doing initially on chain is for the customer experience. So it seems like things are being done instantly on chain, which Domus will do the ICO on that, which would be a liquidity event. A lot of these things, and start to build out that infrastructure. But a lot of these things that are done on chain will have secondary processing off chain because no one recognizes it. And a lot of people just, I want, for whoever is interested in investing here, they need to understand that, because a lot of people are saying, well, how are you doing a mortgage product on chain? We're not doing a mortgage product on chain. On chain is just consummating the transaction. It looks instant, but you still got to do all this processing. You got to record the note and the mortgage, and not the note. We got to record the mortgage. You got to do all that stuff off chain. It's just the experience of it is on chain. So it's important to understand it, and that's what a lot of people are missing. They're creating these things on chain, but then they don't have a bridge to get it to reality. Yes, in the future, do I believe that a lot of these things could be completely on chain? Absolutely. With some lobbying, years from now, I do believe that like right now, all of these things will be done on chain. We'll process the money off chain so that jurisdictions can get paid. So we'll collect all the doc stamps on a deed, all of the intangible taxes. When we do these things, they're going to get money, right? So I think, years after this has been perfected, could you go to a jurisdiction and say, hey, listen, why do you have an official records department? Half of your transactions, this can be done on chain. It could be more secure. It can increase your revenue, right? So, hey, why not adopt this on chain? Let's take out this part of your official records, right? Put everything on chain. You're gonna get more money, and you're going to lose an expense, right? You're gonna get the same amount of money or more because there's gonna be more transactions on chain, and you're gonna be able to reduce your overhead, right? By not managing this. Just put it on a blockchain, on a public blockchain that you control. And so, yeah, do I think that we'll eventually get there? But until then, you have to have a bridge, right? And it's a lot of people that they make this fancy thing. It's off chain, I mean, it's on chain, but they don't have a bridge to take it to make it reality, and no one's going to come to them. Right? Now, the government's not going to come to them, and then a lot of times they try to make it where they don't pay taxes, and they're trying to get around taxes and all that. No. Pay the taxes. That's how you get these guys on board. That's how you're going to get if you can show to a politician, where they can raise revenue and lower the tax burden on maybe another part of the budget. Hey, I think you're going to have a more powerful argument if you show the benefit instead of, just being for, giving trying to pass off your libertarian view. Deed fractionalization. So we created a Domus deed. Now we're going to work on fractionalizing it. We'll invest in iterating the models. We're spending enough money on the previous models to get them up and running. And but we're going to have to iterate. We're going to get feedback. We're going to have to iterate all of these models to make them better and better as they go through. I'll talk about how we'll iterate that in a little bit. Then we'll need to get our own Horizon core developed so that it processes the information in the house. We'll add 50 additional doors of Horizon and telehomes. We're going to add 25 interim mortgages. I'll explain how that works in a little bit. We'll continue to fundraise. Okay, we got the same products, services, clients from previous phase. We're going to add something. We're going to add the REIC platform. The REIC platform is going to be key because it's going to help with the iterations. This is going to help us be able to test and grow the network. Your early adopters are going to be the REIC community because they're always trying to find ways to get deals done faster. They need liquidity. And so our REIC platform, what we're looking for, some of the highlights of it is we want to be able to make a platform. We're going to take that our appraisal platform and our investment, the appraisal model, the investment model, integrated into the REIC platform, where a wholesaler, right, in that community that wants to wholesale their house, maybe they want to sell us a home, they could put their property that they have locked down online, and they can get an instant offer. They can get exactly what our ARV would be, and they could know how much to sell it to us for, and we could instantly pick that property up from them. So we're talking about instant cash offers. Anyone actually could submit something where we get instant cash offers. And with the 25 interim loans, we'll also offer from our debt fund, we will offer instant hard money loans. Okay, so that's going to be the next iteration of our products. Let's go to phase 4. Do $32 million equity, and we'll do $23 million of additional debt. Investment would be to go ahead and get the Horizon I built, which is going to help with creating the digital twin, a property management model, dispute resolution model. Now, look, I know that a lot of people feel like a contract is a contract, but specifically in crypto, a contract is a contract, and you should just if somebody makes an error, that's on you. It's your bad, whatever. I do not believe that that is going to be a reasonable solution, particularly because you have an off-chain environment that you've got to deal with. So you've got to be able to deal with a situation, a dispute on chain. Even though you have smart contracts, you're going to have problems. You're not going to be able to write the contract perfectly. There's going to be some kind of dispute. So you've got to have legal arbitration available on chain to be able to have a successful community, because you don't want to have an environment that has an off-chain environment and an on-chain environment, and the off-chain environment they go off-chain to get a resolution from a judge, and it destroys the judge is not going to care about your on-chain solution. It doesn't recognize it. So until you get case law and you get the ability to have recognition off-chain, on-chain, right? Then you're going to have some type of resolution on-chain and try to bind it to that. Okay? So that conflicts can get resolved. So you've got to have that type of model where you deal with conflicts, because you're just going to have it. You're not going to be able to create a perfect contract. I think it'll streamline a lot of the headaches because you'll have everything outlined, but there's still going to be problems you got to resolve. Then we'll look at developing the marketplace. We'll look at developing the equity marketplace, so people that have deed fractionalization, they can be able to sell their equity. So we'll look at developing that. We'll add 40 additional doors, 25 additional approximately 25 additional interim mortgages, and we're also going to add a piece to this from the debt fund, which is warehouse mortgages. So what we'll want to do to start to get down to where you got that 30-second close is we want to be able to have our buyer go online and be able to execute exactly like our John model. Be able to have John go in there, choose their mortgage options, and be able to close funding right away. Well, in order to do that, we've got to warehouse that loan. We've got to close that loan, warehouse it, and then sell it to the secondary market later off-chain. So we're going to have a warehousing facility for those type of mortgages, so that we can now, at this point, what we're starting to do is we're starting to close in on that 30-second vision by being able to do conforming loans and then selling them off-chain in the secondary market. We're also going to, with this PM model, we're also going to look at acquiring, as we do the PM model, we'll look at acquiring those long-term rentals, which means that we'll have long-term rentals that we can use our deed fractionalization, sell it on the equity market, and be able to unlock some of this. Start working on unlocking the illiquid walls, surrounding the real estate assets. And very much like realty, well, that's where the equity market will be, and then we'll start with our long-term rentals to be able to have assets to place in that market. We'll be the first individuals to use that marketplace, and then we'll iterate models, always iterating. Same products, except we're adding conforming loans, and then we're also adding long-term renters as our clients. All right, so this is our capstone, final capital call. What I'm trying to project out is something from 24 to 36 months on an activity. Beyond that, I'll need a crystal ball or something more powerful than what I've got currently. $22 million capital call, $18 million for the debt fund. So what we'll do is we'll work on a flagship project. So kind of like how, you want something aspirational when you're going towards the public. So this capstone is really the final phase in trying to get this out as a market-ready product to the market. And so, when Apple put out the Apple Vision, they're going to have cheaper versions of the Apple Vision. But they put out the Pro first. They gave you all the bells and whistles, right? And made it where it's aspirational. And then they sold you and later on they're going to sell you cheaper versions, right? Probably under $1,000. Okay. But you start with that first. You make the buzz about that first. Same thing we're looking at doing here. Creating a flagship project, right? Where you do all the bells and whistles, sustainable house, all of the technology on display, and make it kind of a media event the best you can to promote the technology. We'll launch Marketplace. We'll work on starting to deploy this to Main Street. Again, I feel like, the iterations, the feedback that we get from our real estate investment community, you got to have all that before you go Main Street, right? A nervous buyer is not going to be the one that you want to be iterating on, right? So that investment community is going to be where you're starting at first. So at this point, I feel like we'll be able to deploy it. You'll have a market-ready product that you can go to a builder and say, hey, listen, we can sell you the technology or license you the technology. We can install Horizon Core, Horizon Eye. And then you're going to have the ability to close this faster. Plus you can make, maybe some royalties, maybe even participate in our marketplace, offer different, different products and services on the marketplace, and start to try to build out the ecosystem to where you can do this on a national level. We want to break into the short-term rental market. I believe in 24 to 36 months. Right now, I wouldn't buy the short-term rental market is very soft right now. There's possibility if we find a spectacular short-term rental deal, that we might be able to do something a little bit earlier. But I would bet that we need the market to stabilize a little bit more before doing it. That's going to be the end, and we'd have to review it at that time and see if the short-term rental market is something we want to get into. But I do want to have that capability. Um, we'll add more interim mortgages. We'll add more to our warehousing line, capability of our warehouse line, and we'll continue to iterate. Same products as before. But that is, at this point, you've got a market ready product. You've got everything that you've got everything that you need to be able to deploy a 30-second closing on chain, and you've got track record, you got some traction to be able to deploy it. Short term. So let's look at the next frontier, right? You got a market ready product. You've got $65 trillion in market value of homes out there. $65 trillion. You've got 120 million units out there that I think could use this property in residential units. 6 million commercial units out there. Okay. The products and services that have added to our GDP is around $5 trillion. Okay. I believe that we could capture 1 to 10% of that market, of that total addressable market of fees and services. So you're saying, hey, I can get you a product where you can close faster, cheaper, right? Transparent. Tokenization. All of these features, I believe that it's going to be a compelling case. If the market doesn't get flooded by the time we develop all these things, if the market isn't flooded with alternatives, which I think it's just going to take time for people to figure this out, to get the end-to-end system that will make it where you can put this out on the market. I mean, if you look at just do your own research. Look and see what people are offering. Go to Proppy. They're offering and they do, they're doing auctions where they're closing it in seconds. Closing a house, selling it in seconds. But then the person's stuck. There's no ecosystem, right? And so, because they're not driving and creating an ecosystem, where they're doing enough and testing enough. And you got to have the ecosystem. But you just look around, most people are creating technology, and they look inside of the current system. They see the potential, but a lot of times they're just not figuring out how to fully, bring it to where it's useful. And I think, we have the ability to do that. So I think, 1 to 10%, if you capture that $5 trillion, and I think with fractionalization, that's going to double. I'm trying to be grandiose, but I think if you can tokenize and you can fractionalize ownership, the hurdles to ownership are going to get down, are going down. Okay, and the incentive to fractionalize is going to be big, because if I fractionalize it, you're going to start seeing two different values. If you fractionalize, you're going to have a one token value where I'm selling it to you peer to peer right away. It's a certain value. I'm going to get to that. if I fractionalize those tokens, I'm selling it online, right? I'm selling it in the marketplace. There's going to be a different valuation for that because it's going to be convenient for more people to get in. It's going to drive up the price. So you might have a house where the rental is worth $400,000. The on-chain value could be $550, $600. You know, because you're trading it above book value. There's like a book value, and then there's what gets traded. No one, very rarely does a stock sell at book value. So I think the same thing is going to happen. You're going to have more velocity of transactions going back and forth. And if we're the platform that enable to enable those transactions, I mean, it's gonna be something. But let's just say, from the 36-month mark, add on another 10, 20 years, I think, 1 to 10% of the marketplace is reasonable, which could bring the potential of $50 to $500 billion revenue. I think the platform could do that, particularly if you have a marketplace where you start to add vendors and they start to innovate on top of the platform, where you're starting to attract people to get on. There's a demand to get on the platform because there's certain things that you can get from the marketplace that you can't get off chain. I think it could be something. So if you look at a PE, say 25, you're talking about valuation of 250 to 2.5 trillion. If you're an early person involved in this, and you're getting, you're in an equity position at the ground floor of this, to where, let's just say, we're talking about initially putting in, $150 million. Hey, if this thing could be worth 1% of that valuation, could be a decent return on your investment. I don't know. But I think that this is, the best opportunity that I've seen out there. I feel like it's something that I've been built to do over 30 years. I always thought that I couldn't understand why real estate wasn't traded like equities. You can trade petstocks.com, but you can't trade a house. I've always had that. Now I see where this could happen, and I'm just passionate about trying to make it work. And I just think it would make, so many people's lives better to not have, over 30 years, I've had to, sit there and go to closings, and you buy and sell 1,000 homes. Part of your life is just there, driving to a title company, sitting there and signing, 500 pages of document, initialing it, signing it, right? Waiting for the transactions to close. You start to think about legacy, man, that's my legacy. My legacy is to be able to, I can't get, that part of my life back, of all those hours sitting at a closing table, signing documents. I would have much rather clicked the button on my phone and completed the transaction and had my money right away. Would have been much more preferred. But this is something that, a gift that we can give to, you know, our children and grandchildren. The ability to not have to go through these hurdles, to just get a place to stay, to be able to invest and not be the, you know, right now, if you wanted to get in on an investment, you got to be an accredited investor to get on something like this. You know, tokenization would be able to help, be able to get people in on the ground level of opportunities like this. So let's talk about the next step. Next step is we're looking for an initial $500,000 in a convertible note. We'll do a 12% rate, duration of 12 months, with a 25% discount. So that is what we are offering, and hope that you join the journey.